Last week, chipmaker Nvidia hit a market cap of $1 trillion. Nvidia is the ninth company in history to reach that milestone, and there are only 5 other companies worldwide worth more than $1 trillion. Those are Apple, Microsoft, Google, Amazon, and Saudi Aramco. Nvidia's stock explosion is a result of the AI boom. Nvidia is the premier designer of graphics processing units, or GPUs, which are essential for building and training AI models. Sales rose 19% last quarter, and the company's revenue forecast for the current quarter was roughly 50% higher than analyst estimates. So, Scott, clearly Nvidia is riding the AI wave, but there are a lot of other companies that should probably be riding it too. I mean, AMD makes chips, so does Intel, so does Qualcomm, which have historically been Nvidia's biggest competitors. But as it stands, Nvidia's market cap is roughly 6 to 7 times larger than theirs. What about Nvidia is making it such a winner?
Yeah, it's a correct question. I mean, it really is getting to sort of the executive washroom where there's only 6 other executives. Mm-hmm. And if you think about market valuation, it's really 2 things. It's performance and promise. And probably not in that order. It's probably more important to have promise and performance. And we got to give it to them in terms of performance. They have essentially never missed their earnings, and that is they've only missed their revenue projection 7 times out of the last 75 quarters. They either meet or beat all of their expectations. So the street and analysts just say this company just continues to deliver. It's also better to be lucky than good. They started running. They make graphic processing units, or chips, if you will, to generate on-screen graphics. And it turned out that the exact type of processor to do this, or the type of chip, fits really well to the needs for generative AI. And now Intel is playing catch-up and also designing GPUs. And in some, Nvidia was just able to see around the corner better than the other folks. However, there is some good news for all of them. The domestic chip manufacturing and incentives from the Federal CHIPS Act should be tailwinds for Intel, which is looking to expand its factories. And there are rumors that Nvidia will use Intel to help build some of its chips to decrease its reliance on TSMC's factories in Taiwan and Samsung's in South Korea and China. It's just, this company is, it's just incredible. It's up 163% year to date. I think it's responsible for something like 10 or 15% of the S&P's gain. They have a ton of momentum. Especially around AI, which will increase demand for specialist chips by 10 to 15 billion. And as a result, NVIDIA's annual data center revenue, which accounts for 56% of its sales, could double. This is just crazy. The question is, what does this mean in terms of valuation? There's just no doubt this company is incredibly well positioned. With a market cap of 952 billion, it's worth as much as, get this, Intel, AMD, Qualcomm, and TSMC combined. And it's trading at an enterprise value to EBITDA of 145 versus 18 at Meta, or 22 at Apple, or 17 at Google. The question is this company overvalued, or is it an amazing company, really well positioned? And I think the answer is yes. I think relative to valuation, I wouldn't get near this thing.
Yeah, and we should talk about the CEO as well, this guy Jensen Huang, who I had never heard of until a couple of weeks ago. Just some interesting character traits. He always wears a leather jacket in every public appearance. Mia found this stat, which is that there are only 2 photos on the Reuters photo database that show him not wearing the leather jacket. He has an Nvidia tattoo on his arm. He's got this massive Reddit following. The Nvidia subreddit page has over 1 million members. The thing that I'm thinking when you talk about, is it overvalued, is it hype, are we kind of witnessing the birth of the next storyteller CEO, sort of the next Elon Musk?
Well, again, this goes back to instinct. And our instinct is that we need a super being. Our brain is big enough to ask very complicated questions, but not big enough to answer them. So into that void slips a super being. When societies become more educated, the reliance on a super being and church attendance goes down, but we still need those super beings. So the Jesus Christ of an information age is no doubt Steve Jobs. Technology is the closest thing we have to spirituality and mysticism. No one has any fucking idea how their iPhone works, so it feels magical and godlike. And these individuals are also billionaires, which means that we really, it's like sex appeal on top of godliness. And that's the reason why Elon Musk can say these terrible things and act so recklessly, and everybody decides that it's genius, not just a mendacious behavior. So you have kind of Steve Jobs, and maybe Elon Musk is competing for the Jesus Christ of our information age economy. And then you have sort of the 12 apostles, and they all sort of maintain certain traits. One, they leverage a new medium. If you want to outperform your competition, whether you're a CEO or a company, you need to leverage a new medium. And Elon Musk did this with Twitter. Steve Jobs was a master at leveraging and endearing himself to famous tech reporters. Burberry was great at Instagram. Kennedy was great at television. And Mr. Huang has clearly picked Reddit. In addition, visual metaphors are really impactful. Steve Jobs had a unique look. Michael Jordan has a unique look. Madonna, a unique look. Don King, the boxing promoter, had a unique look. These visual metaphors are really important. And whether it's a black turtleneck or a leather jacket, the personification of a company, trying to personify it such that you like it, such that you will take the multiple on EBITDA up, such that you can raise capital more cheaply, such that you can then invest more in IP and chip design than your competitors, which creates an upward spiral. All of these individuals, think of all of the CEOs of these companies, they're iconic. They have very strong personalities. They have very strong public images. They're manicured by hundreds and hundreds of people. They manage their brands very tightly, and this individual is doing exactly that, and it's paying off.
Yeah, I was going to ask if you think, you just have more experience interacting with these people. Would you say that something like that leather jacket decision is just what he likes, or do you think he's got a whole PR team saying, hey, we liked the leather jacket last week, you should keep it on for the duration of the next decade?
The answer is yes. I'm sure he showed up with it. He likes it. He bought it himself. And then some people on Reddit or some people in the press noticed it. And his PR people said, wear the jacket. We want to be known for it. Yeah. And so I'm sure much or most of it is organic, and then they run with it. And you can bet that whenever he gets off a plane somewhere, and there'll be a lot of photographers, one of his PR and comms people are like, I don't want to figure out really hard work. Just put on the fucking jacket. And so that is, very few investor relations and comms attracts more and more capital, and this stuff's important. Imagery is really important, and how you manage visual identity and the words they use in their earnings calls. There's no doubt. It's kind of the new marketing, Ed. There's now, I think at some point there's going to be more people in PR and comms at these companies than there will be at marketing, because the traditional vehicles or channels for marketing, broadcast advertising, are going away. I just read this crazy stat that now less than half of U.S. households have cable television, but everybody reads the newspaper. Everyone has an insatiable appetite for big tech. I could call CNN, CNBC, Canadian Broadcast Company, PBS, and say, I have some insight into Monsanto, and I want to come on and talk about it. And maybe one of the five would say, sure, come on. If I called and said, I have insight into Nvidia and AI, 4 out of the 5 would say, can you be on tonight?
AI expert.
It's just the public's obsession with technology and the storytelling around technology is insatiable. If you're watching CNBC, you're really watching tech TV. Occasionally they talk about some of the other stocks, but they really just want to talk about Apple, Amazon, and the Seven Dwarfs.
And then just a final point, we were talking about vertical integration. So something you mentioned, Intel's strategy, which used to be a juggernaut, it's down 45% in the past 5 years. Their strategy was, okay, we're going to design and we're going to manufacture their chips. It's very different to Nvidia, which outsourced manufacturing to TSMC and Samsung. Nvidia focused exclusively on design. And now here we are, and their GPU is 39 times faster than their previous one. It's the premier GPU in all of AI training. Do you think that Nvidia is clearly making the case that businesses should strive to be specialists versus generalists. Do you think that applies to all business, and where does it not?
This is a tough one because I've been preaching for a long time that you can't get above $1 trillion without vertical integration.
Yeah.
And then eventually Apple forward integrated into stores. Because in order to get above $1 trillion, you have to have such an incredibly strong culture and brand. You need to control the entire consumer experience. Mm-hmm. And if you think about the companies that get usually above 200 or 300 billion, they're totally vertically integrated. Mm-hmm. You know, verticalization is kind of the trend over the last 30 or 40 years. These guys have bucked the trend, and they've been focused more on design. Now, what they have done is they've sort of taken the Uber and Airbnb model and said, we're going to leverage other people's massive multi-billion-dollar investment in chip-making plants. I mean, chip plants cost billions. And I think what they may have correctly assessed was that there's a lot of manufacturing capacity. What's lacking is truly differentiated chip design around a very specialized IP as it relates to graphics that ends up being really relevant to generative AI. And they just hit it. They just hit the bullseye here, and they probably have better margins because they don't have this 5 or 7 year lag or wait time trying to build a multi-billion-dollar chip plant. Now, the question is, does that make them vulnerable at some point when they don't control the manufacturing? And if manufacturing capacity slows, are they stuck out in the cold? I think that's the question around whether this company can get much further beyond $1 trillion without controlling its manufacturing.